Does the Fed lie to us? Let's talk about it. Okay, so with the Fed, um, a lot of what we're going through right now with the rates climbing higher, right? So right now we're at a falsely high interest rate environment right now. The feds control that environment based on their policy, right? So at some point they said, oh, don't worry about inflation, it's transitory, right? Like you heard that so many different times, it's transitory. Was that a lie? I know lie is a hard word, but let's talk about it for a second, okay? So we have the Federal Reserve that has some of the smartest people in the world, you would hope, at the Federal Reserve, right? So we have them there. They understand what happens when free money is given out. So when money's given here, money's given there, everywhere. I mean, honestly, if we think about it, all the government money that was going out, all of the money that was, I mean, we had such low interest rates for so long. That was legit free money. So with all that going out, people start spending more because they can. They have more money to spend, right? So when the Fed came out and said, oh, it's transitory, don't worry about it. And then the very next month said, oh, we have a problem, we're going to start raising things. Right when they did that in January, the market just went crazy, right? And so we've spent 2022 with a crazy market with everything going like this. Prices of everything, interest rates, which has affected the house market. It's hurt people trying to get into homes. Here's the good part about it though. Okay, so now that we've went through a year of this, it takes months for the efforts, what the feds are doing, it takes months for that effort to work, right? So right now we're starting to feel what they've done this whole year with raising. It's starting to work. Inflation is going down. People are spending less. The only problem is now that there's jobs being lost by it too. So as inflation moves down, we've seen throughout the whole year when the feds speak and they say we're going to raise it, we're going to raise the Fed fund rate by 75 basis points, right? The market goes crazy, everything goes higher. Everybody's in anticipation beforehand, so the markets are going crazy 2 weeks before they speak. And then the day they speak, it goes even crazier or it calms down, right? So the good thing about all of this, because we've already gone through this pain this year and hopefully we're on the, hopefully we've hit our peak right now. As inflation numbers come out now, and we saw this in November. In November, inflation numbers came out and they were better than expected, which shows the Fed that their efforts that they're making are working, right? So then when that happened, we then all of a sudden had a pullback on interest rates and everybody was happy. Their rates went down. So remember, when you're talking about mortgage rates, what the Fed does is doesn't directly affect what the mortgage rates are doing. It's what they say that affects it. So now I hear Fed members saying that they're going to pull back on the December Fed meeting. They're going to pull back a little bit and do a 50 basis points raise on the interest rates. So what that's going to do to the market is say, yes, we finally hit the top of inflation. Now we're going to start seeing things go the other way. And as the Feds speak that direction, because it's more about what they say and their actions rather than what they do when it comes to mortgage rates, because those are long-term loans and the Fed fund rate affects short-term loans like car loans, credit cards, HELOCs, stuff like that, right? So now that inflation looks like it's peaked and it's starting to move down, we will start to see better interest rates come on the mortgage side as those reports come out and it shows inflation is moving down. Here's where I think the sweet spot is. The sweet spot when you're buying a house. So there's 13 million people sitting on the sidelines waiting to buy a house. They're waiting for rates to come down. The minute that the news media starts saying, okay, rates are down, all those people are going to run out and start buying houses. So then we're going to be going through the gridlock that we went through the last time, right? And that's when the prices of houses start to move. The sweet spot, I believe, is right now. Because as you're starting to see rates go like this, and they won't go fast because, and honestly, that we're to see 2 and 3% interest rates again, we'll probably have to go through another pandemic. And we saw that we're living in the after effects of that. So will they allow them to go that low? I don't think so. I think we're going to be looking at, rates that are probably in the fives. But because now we were used to rates in the sevens, as they get into the fives, those people that are on the sidelines are now going to jump out. So if you're looking to buy a house and you're sitting on the sideline, the sweet spot is when you start to see the inflation go down, because you know that in the future the rates are going to be lower since inflation is directly affecting our interest rates. And if you buy a house while sellers are scared, you're going to be able to get a better deal on a house and then refinance your loan later. So I really think that now that I'm starting to see the inflation numbers start to give a little bit, and I'm starting to see Fed members like Jerome Powell come out and say that they should raise the basis points 50 basis points in December, that's a sweet spot. That's a sweet spot. If you're on the sideline waiting to buy the house because the sellers are still not able to sell their houses very fast. The minute that the news media catches on and they start saying rates are down, rates are down, rates are low, rates are low, all the 13 million people that have been sitting on the sidelines are going to buy too. So then we're going to be dealing with prices going like this. And right now, why sellers are still scared and they can't sell their houses very fast, you're getting more incentives. So if you were somebody that didn't have all of the money for down payment or to pay over appraised value, and closing costs and all of that, this is the time, because we can get the seller to pay a lot of that, and that cuts down on what you have to come out of pocket. So look for the sweet spot. If you want to be able to see if you get approved for right now and how we can make those numbers work, let's talk. Let's catch the house, why you can get it cheaper, why you can get a discount, and why the sellers are scared, right? Be greedy when people are fearful, be fearful when people are greedy. Thank you, Warren Buffett, for that one. But let's see what works for you, and let's try to get you into a house when it's at the best time that I've seen in a long time. And like I said, if rates go down further, we refinance you later, but at least you catch the best deal on the house. If you want me to look at your numbers and see how everything looks and see how to line you up, I'm happy to do it. I'm going to leave my information on the screen. If you like this video, please like and subscribe to my page for more informative videos. And I hope you have a great day.